Federal Reserve recently raised interest rates for the second time this year on top of 7 rate increases last year.
Those increases have boosted the rates our money earns as it sits in our bank accounts. But as inflation buster Matt Gebhardt explains, not all increases on savings rates are equal. Matt?
Yeah, that's right, Mike Deeney. If you've got cash parked in a savings account at a large bank, chances are pretty good it's earning you next to nothing. But it does not have to be that way.
Interest rates on the rise once again as the Federal Reserve continues its goal to bring down inflation.
Every time the Fed ticks up the interest rate, the interest that we pay on loans and credit cards goes up. But so does the rate that banks pay us to hold on to our money, says LendingTree's senior analyst Ken Tuman.
Not as fast as loan rates, credit card rates, but they have been going up still.
Tuman says that smaller banks and online banks typically pay out more than big banks. But many savers tell LendingTree they're going to go ahead and stick with those larger banks. Thank you very much.
A lot of people are losing out quite a bit because of that.
To see how much, the KSL investigators decided to look into some specific rates. Let's say you want to stash $5,000 into savings. Well, Bank of America will pay you 0.01%. While Bank of Utah's iSave will get you 0.65%. Chase's rate also 0.01% interest, but America First Credit Union will pony up 1.45%. Wells Fargo offers a 0.25 interest rate. Compare that to online bank SoFi, which will pay 4%. And those interest rates can make a big difference to your bottom line. Stashing that $5,000 for a year at 0.01% earns you just 50 cents. At 4%, you'll get $203.71. Tuman says if you're getting a skimpy return on your money, shop around. Look for sites that compare things like rates, fees, and customer service.
The information's out there. You just have to go through it and decide what's most important.
But between our direct deposited paychecks and all those streaming services, utilities, and other automatic bills, switching can get real tedious.
Often banks don't make it easy to close the accounts.
Tuman says consider opening a new savings account and linking that to your old checking account.
You can benefit the quickest from the higher rates.
Now, to be clear, higher savings rates won't exactly have you rolling in cash, but when you're trying to bust inflation, a couple of cents versus a couple $100, hey, that's real money.